Hey everybody, Brian here from quantlabs.net. We are now going to do analysis on May 9th, Tuesday. So let's get to it. Okay, so first thing is, I've seen this before, the forward performance versus the S&P 500 is consistently lower than the S&P 500. Just putting it out there, if you're wanting to watch this on an intraday level, you could probably, if you in the scalping, do the shorting opportunity here because it's consistently below the S&P 500. So even if you look at over the last year, I'm not sure when the new CEO Fields took over, but it's since then the stock has been pretty bad, as you can see here, and it's just consistently on a downward trend when everything should be going up. So forward could be a good shorting opportunity. Now, this came up today where the VIX, S&P 500 VIX, is at its lowest now. Considered the fear gauge of the S&P. A lot of options traders now no longer use this indicator exclusively. When you look at the performance of the S&P 500, let me just show you. Okay, so we're going to now look at the VIX and we'll compare it to, actually we'll do three comparisons. So we have the VIX, okay, do an intraday interactive chart. We'll keep it to the max. So we'll add on the GSPC. So traditionally we should see a relationship there, which is somewhat interesting when you look at it. But I'm going to add in one more addition here. So we'll add in the Russell 2000. Here it is. Maybe we could use that. 2000, this one right here. Okay. So the reason I'm showing you this is that, okay, in red, obviously you have the Russell 2000. You have here, now if you were to use a better indicator if you're watching to watch the markets, it's pretty obvious you would want to use the Russell 2000 alone as an early indicator of where the markets are turning. You can see here in red, it's turning sooner than the S&P 500. S&P 500 seems to be more lagging, which makes sense when you consider S&P 500, or at least the VIX, is just the performance of the overall performance of the S&P 500 itself. You always want to use the implied, not anything lagging, or even present day, because you can see here between March and the actual spike, you're looking at a probably a 2-3 month, like it's just lagging on the VIX in blue. To me, it's just one of those indicators. It's just only lazy traders really use, but you could clearly see here the S&P 500 is a nice indicator to show you when the markets are about to tank. And right here, you could see that in August 2007, when those markets were about to tank, just before the S&P dropped in the 2008 crunch. And you also usually get better performance, as you can see here, 28%, and a little higher percent-wise on the performance on the Russell versus the S&P 500. And usually, just right there, you could see there's a spike in the VIX May 1st to here, August. So again, that 2-3 month delay. But mind you, if you were just watching here with the Russell, you will find it is a much better indicator to watch for the S&P 500. Just again, we're watching on the max charts. Okay, so that I'm just discovering now, but you will find that the moves are a lot more extreme than the S&P 500. So if you want more volatility in your uh, trading. Definitely the Russell is the way to go. But when you look at here, you can see it's starting to turn, and again, just slightly ahead of probably a couple of days ahead of the S&P. Mind you, here we go. La da da. The VIX shows no indication of this turning. So, as the pros say, the VIX is pretty crappy to watch as an indicator because it's just so far behind of what actually happens in the markets historically most of the time. So it's an okay indicator, but there are better indicators from industry. So let me just wipe out these indicators and see if I can find it on the. Let me just do it this way. All right, so if I plug in VIX, let's see if it can come up with what I'm looking for here. VIX. So there is an indicator that is much better to watch than the VIX. I can't find it, but when I find it, I'll make note of it. All right, so that's the VIX. Now the next two stories are quite interesting. Last week we talked about the Hong Kong real estate and the Hong Kong or Hang Seng with a tie-up with China, mainland China, the performance of it. This is where the tinderboxes is in Asia, in China, where if there's a blow up in the global markets, it will come out of most likely China. There's been a lot of false start signals over the last probably year or so, but the system seems to always catch it, and it's kind of frustrating. But what I wanted to do, it seems to always point back to the Hong Kong real estate market and the Chinese uh, real estate market as well. And for some reason, I decided to look at the largest ETFs in China or specifically Hong Kong. So there's this one, the Guggenheim Alpha shares. Actually, is that number 9? Okay, maybe there is a better ETF overall. Let me just show you how I go about doing this. You want the biggest. So okay, let me just go to the best ETF for this. Okay, yeah, here. So we're looking for number 1. It's RXW, Spider, Dow Jones International Real Estate. We don't want that. We want specific Hong Kong real estate global. We don't want that. VNQI. Let's see. Vanguard X. So that's everything outside the US. Number 3. This is number 4. FTSE ETF. What's this? Developed US Index. That's a US one. iShares developed. So we don't want developed markets. Let's see what else we've got here. Maybe what I had was the biggest. Okay, so it's number 7, I think. DRW, global excluding US real estate. Again, global real estate. GRI, global real estate. Okay, so this is the biggest for specifically for China. Developed Asia, we don't want that. So TAO is the best one, and this is the China real estate market. Okay, so sorry about that. So here we are in the Yahoo Finance. So when we look at, let's say the, I don't know, 6 month, excuse me, it has been rising, but it's coming down. So this could be a really nice indicator to see what's happening in China. When you look at the 3 month, again, long, no, not long term, but it's coming back, but you can see it does come back, come down, come back. So it's a little choppy, but the overall trend is down. 1 month, again, long term down, and I don't know. Intraday, it did gap up as the indicator did state, and again, it's flatline, but I wouldn't pay a whole lot of attention to that. I would be more concerned about the long-term trend of a downward movement of Chinese real estate in this ETF. Now, one of the other takeaways I want you to be aware of is there is now chatter about the performance of ETFs, which is fine, but you always got to make sure you understand what is the top holdings in those ETFs to make sure that they truly represent the performance of the overall ETF. Because let's say, for instance, you look at the S&P 500 performance, like here in the green line, in the last year, I bet you, and it's been true, they've been stating for the last year, the top performers, which are basically the top five companies with the highest market value, are Facebook, Amazon, Apple, Google or Alphabet, and Microsoft. All of those stocks have been doing fairly well, but they've been bringing up the overall S&P 500 and the Nasdaq up quite a bit lately, including lately. But the overall market, when you take out those stocks, they've been trending down. So you need to be aware of that. So those type of better performing stocks will skew the overall average, in this case the S&P 500. But when you look at the ETFs here, this is another example where some of these ETFs overall may be a better performer overall, but you may on the other hand get 5 of these out of 10 that may be dogs and maybe stinkers, where maybe one holding may be outperforming all the rest of them, let's say 9 of them, and may skew the performance of that ETF. So that's why they're saying you need to really understand what the holdings are of in those ETFs or whatever the assets may be, to ensure that the overall performance of each holding is have the right trends, as opposed to just 1 or 2 holdings that skew the overall performance of the ETF. So you got to make sure of that. And the other problem is you want to be on the lookout for is to make sure that if there are a lot more dogs in, like more holdings that are really more negative than the overall ETF, when you want to cash out, when the ETF starts to turn and go negative, to cash out of the ETF may be harder to do, as more people will want out of the ETF. So these are things you need to be very aware of when you take on ETFs. But again, that's another discussion. So again, we've talked about the overall performance of the Chinese real estate here, this TAO. Now another one to watch, again, seems to be interesting, is how the overall Chinese economy in the mainland China is performing, whereas there are quite a few mainland Chinese stocks that are part of the Hang Seng in Hong Kong. So the overall performance needs to be identified of Hong Kong or the Hang Seng index. So let's say if we look at the 3-month chart, it's been doing okay. And this is another good sign of how on Friday that I put up an alert about how there was an oversupply of industrial metals, and then when the LME or London Metal Mercantile Exchange noted that, markets for that day took a dive. So again, this is another indicator you may, I'm not saying may be able to use as an early warning on the overall direction of how China is doing, which again comes back to manufacturing within mainland China, to see basically if those stocks are doing fairly well, that means they're in a manufacturing process, which means again that points back to the demand of those same industrial metals that you can watch to get an overall performance for futures and options in the commodities market. if that makes sense. So you can see here that over the last 3 months, it has been a steady uptick since April, which is good when you compare that again to the S&P 500. Just as a comparison, the Chinese market has, again, just a little bit, maybe let's say 3%, 2% outperformed over the U.S. market, there's S&P 500, which means maybe it's early times right now where we might start seeing the Chinese market take off for the short term. But again, when you watch the Shanghai Composite, it's a different story. So let's do that and check out the Shanghai Composite. And remember, when I say Shanghai Composite, composite index, Shanghai Composite. So what we come up with. Okay, let me try this one. Shanghai. See, no, they don't have it. So I think maybe the Dow Jones, this might be the better one to watch. I don't know. So let's do a 6-month. Let's see what this comes back to the Easter egg hunting. To here, nothing. Okay, so we can't really get a gauge on the overall Shanghai index. I'm sure there's a way, but let me just go to Google and see what we come up with. Shanghai Composite Index. There we go. So it looks like Google's got it. So let's take a look at the 3 months. So you can see it's been tanking. And again, the Shanghai Composite Index is the mainland of China index. So when you compare that, let's see here if we can go back to, so here we go. So we're in an index. So if I compare that to the Hong Kong, Hang Seng Index, you can see here that they do diverge. And right here, starting sometime the last few days, that they've been diverging. So be aware of that. But these, again, when you study the stuff like this from Bloomberg, you will get these sort of patterns that are not consistent throughout the year or even for a set of years, but you want to be able to watch these patterns quite a bit. So something else that we need to be aware of, which is quite true, green is the Hang Seng. So this news alert came out, and when you look at the Hang Seng, which is in green, right? I've done a RSI on the relative strength indicator. As you know, 70 is the point where it's oversold. So it's been bouncing around. Right here is a good example. March 21st, hit that 70 mark, and it dropped. So this is a fairly good little indicator to indicate how the Hang Seng does. When you go here, same thing. It drops a little bit, bounces around, dips. So there's definitely a correlation. So here we go. It's going to definitely turn. If you use the historical measurements here, so the Hang Seng will definitely fall based upon the RSI. So that's the peak right here in green, and it should turn. Now let's see how that will play out if I took out the Shanghai to see if we compare that to the RSI for the Shanghai indicator. So here we go. You can see here it clearly says for the Shanghai Composite, that's a buy signal right here. So maybe that's a good signal to buy into because here it's still, well, actually it trended up a little bit, but that is definitely a buy signal right here. And right about here, you can see that there was a nice little rise on September 28th all the way up to here. And that was how much of a bounce? So that's at 29.80 all the way up to 32.30. So that's about roughly a 10% rise between September 27th and November. So in 2 months, that was a 10% rise. You all just looking at the RSI. Pretty cool. Just thought I'd put these little index stories out here. Okay, so there's that. Now, I just want you to understand, because there's a lot of newbies that have joined us over the last few days. If you're really interested in this stuff, I would recommend you follow my Instagram, because guess what? All those charts are indicated here. They are for my Bloomberg consumption. There are some very interesting stories here, or charts that are basically showing some interesting events that are happening in the markets, but my system only chooses the ones that you see in this membership, only chooses roughly about 3 to 4. But I just wanted to let you know about that. One last thing is we're just going to start up our news weekly videos here under events. So keep your eyes on that starting May 15th. We're doing our first powwow for all you folks that have joined. They will take place 7 p.m. on Mondays, Eastern Standard Time. That's the same time as New York. And yeah, so this session on May 15th will be our first session for everybody that wants to get an idea how this work will play out. So what will happen from that day forward, or starting the following Monday, May 22nd, we'll be doing another session, but how that will play out and moving forward from that day forward every Monday, maybe the occasional Tuesday as well, once a week or once a month. What will be happening is we'll have a public session for the first hour, and then the second hour, starting at 8 p.m., will be for you guys only that pay into this service. So that will be for you if you want to participate in those, which will be private. And we can talk about privately about your algorithmic trading efforts as a group as well. And hopefully we can come up with some cool solutions there. And that will be every Monday. As I said, there'll be one Tuesday of the month, and the rest will be held on Monday, same times, but that's how I'm planning to do it. Okay, so keep your eyes on the events under here, and you'll definitely get all the scheduled events and days and what's happening with all these new up and coming weekly webinar video presentations. All right, and hopefully I'll be able to see you tomorrow.